Now, Goldman Sachs says if Trump damages the Fed's independence, this is linked here, gold could hit $5,000 an ounce. You already see it there. Gold has already rallied 37% this year. It's now near a record $3,600 an ounce. Goldman Sachs says that if Trump keeps attacking the Fed, people might run from the dollar and seek safe haven in things like gold. The Barrick Mining Corporation says it's uniquely positioned to take advantage of rising gold prices. Its CEO, Mark Bristow, joins me now. Grateful to have you on board here and to see you to discuss this as gold is in the spotlight. I'm going to ask you a strange question. In terms of price, does it always hold the higher the better?
No, it doesn't, Paula. Good day to you. Nice to be on your show. No, it doesn't always hold.
And can you explain that? Because I know in your business, you are a miner of gold, not just a holder of gold, that there is volatility in the market there that sometimes poses some market dangers, right?
Yes. When I started out in the gold industry, it was $400, and in 1999, it touched $250. In 2011, it went to 1,800, and as you've just introduced, it's now pushing towards 3,600. So it does go up and it does go down. Right now, however, gold is very well positioned, and we've seen for the first time it overtake the euro as a global asset, second to the US dollar, and also compete against the dollar for central bank reserve assets. So there's definitely a change. Last time that happened was in 1996, and before that in the 1970s, when, again, like we're experiencing today, lots of instability across the global economy, inflation, and geopolitical shifts in the form of deglobalization. So a lot of uncertainty, and uncertainty has always driven the gold price.
Yeah, and as you said, people are looking for that safe haven, and it has been gold traditionally. The historical points you bookmarked are not things that we want to repeat at this point in time. So what is the gold market telling you right now, and how is your company preparing to go forward? Because obviously you do not want to get caught up in price volatility, understanding how much investment you have to put in order to be mining gold.
So we allocate our long-term capital at $1,400 an ounce, and so we can, and it's designed to benefit from the peaks and make sure that we operate and deliver value in the troughs, and that's our approach to the way we operate. Most important thing is we've got very high quality assets, so we can adjust how we exploit them as the gold price goes up and down, and we've got long life assets as well. And that's the key. I think we're seeing this real demand on the gold price market, and the supply side is quite tight as well. And just in a normal supply demand equation, that's also promoting an upward pressure on the gold price.
I have a question to ask you because it has happened with copper already. Given the capriciousness, I would say, the unpredictability of the Trump administration, I mean, how much can you mitigate for what that administration is going to do in the coming hours even? I mean, we're waiting on the president right now. You never know what he'll come up with.
So, Paula, the critical thing here is, as you say, the asset that we mine is in the ground, and what we focus on is the quality of it and the ability for that margin to survive the troughs. And as you know, $1,400 is a lot lower than the current spot, and that's the way we allocate capital. If you've got world-class assets, you can adjust the way you exploit them as the commodity price goes up and down. And copper too, just like gold, is also in a supply squeeze. So both, I always say gold is the most precious of precious metals, and copper is the most strategic. And both are critical, and both are in short supply as far as mining reserves go. So and just to point out, Barrick has both copper and gold production. So right now we're extremely well positioned to be able to benefit from the pressure on both gold and copper.
But which is why I asked the question. So I ask you again, when we talk about pressure, right, there is normal market pressure, but we have been seeing something completely different in the way this administration carries out its economic goals. I mean, is there more of a defensive posture here? Does there have to be?
No, I don't think so. I think, you know, the driver from the current administration in the US is to attract investment back into the US. I think that's been in short supply for a long time, and the US has very significant endowment of most metals, including gold and copper. And by the way, Barrick is the biggest gold producer in the United States. And operates one of the biggest gold mining complexes in the world in northern Nevada. And so, you know, I think you're going to see a lot more people exploring for gold and copper in the United States.
Okay, and we will leave it there. Grateful to you, Mark Bristow. We'll see you again. Appreciate it.
Thank you, Paula.